Hey everybody, it's Eddie J on Crypto. Hope you're having a good day. Clearly, the market is taking a big dive, right? Clearly, we're going to be seeing fallout. There is some silver lining. Things like Cathie Wood is a very smart person. Okay, her and her team must have done the research, and they just bought another $21 million worth of Coinbase. So all the FUD nonsense that's out there, Coinbase this, Coinbase that, Coinbase is not FTX. Coinbase is in a highly regulated environment in the United States where FTX is not. FTX US, that operates here, completely separate entity, is also like that, but they're probably going to experience some issues as well just because of the brand. But Coinbase, highly regulated, which means they have to be audited all the time and all this other stuff. Cathie Wood smartly jumped in while the dip is happening in the industry. Now, what we are going to wind up seeing are a lot of people and a lot of companies start to realize just how much exposure they have, directly, indirectly. So take, Tom Brady, Gisele Bundchen. They have a good amount of exposure. Not huge. I'm pretty sure they're going to wake up in the morning and they'll be still wealthy. Okay? I'm pretty sure they're fine. It was just another investment. You have Canada's third largest pension fund. They have exposure. Okay. The question is not necessarily just who has exposure. It's how much exposure did you have, and then letting everything play out to see, well, does that exposure get increased, decreased? Are they going to get their money back? Things like that. You have companies like Circle, who is behind, USDC stablecoin. They've been building up their cash reserve, and they've been making sure that their cash reserve is in a place where they can make money on that reserve, as well as have liquidity access to that reserve. So a couple of days ago, I told you how they've been building up their reserve in BlackRock's government money market fund. Smart. They're most likely make money and move on. It's all good. But what is not good is their CEO, Jeremy Allaire, running off at the mouth, talking about how, the cryptoverse needs, comprehensive regulation and blah, blah, blah. We know this already. How about you shut up and let the dominoes fall how they fall? Don't talk about what we already know and what we've already been talking about. Keep your focus on your business. Stay in your lane. What we don't need are leaders out there spreading more FUD, spreading more doubt, uncertainty, and fear. Yeah, notice how I spelled it backwards. About things, right? Instead, talk about how sure your company is, how strong your company is, what your company is doing to make sure that you have little or no exposure. Let everything else just play out. This is when real leaders stand up. This is when. Not when, this kind of situation arises, they decide to jump on the bandwagon and beat it down. That's dumb. That's dumb. Because then you further hurt the industry. Stay in your lane. Handle your business. Let others handle their business. Okay? We don't need you running out there, which is what he did, running out there talking about, oh, this is a Lehman Brothers moment. Dude, shut up, man. Seriously, shut the hell up. And I'll say it just like that. I'll shake your hand because I think you built a good company, but right now, I think you need to have a more pragmatic approach to how you're approaching your statements in public or your statements in general. Yes, there are going to be ramifications from this collapse. Yes, there is going to be exposure from this collapse. But this is a highly contained exposure in this collapse. Not many entities actually owned FTT coin. The question is, who were the investors in FTX? So we know Binance was one. I believe BlackRock was one. I don't think BlackRock is worried. Again, be more pragmatic in your speech. Keep your eye on your own business. Talk about how your business is doing well. Okay? Stay there. Everything else will get figured out. We will figure out where everything went wrong. We had hints of when FTX was starting to smell funny months ago. And I said it the other day. It was how, and Coindesk, wow, the reporting from that crew. Hat tip. But we knew this months ago when we saw the very strange bedfellow relationship between FTX and Voyager. You loan us money, you loan my other entity money, we loan you money, just all this round robin thing going on. Very convoluted relationships. And then we catch wind, oh, well, hey, Alameda's got problems with, their liquidity. Alameda's got problems with, what their assets are. And then here's FTX. Sooner or later, houses can be brought down because of how they're built. If you built a house of cards, at some point, that house of cards is going to get blown down. It's not a matter of if, it's a matter of when. In some cases, it means a matter of how, why. So there are a lot of things going on, right? Right now, if Binance was to buy, let's suppose Binance comes back with their due diligence. And remember, Binance has not done their due diligence yet. They're just getting started. So if they come back and they say, nope, we don't want this. Okay, that's going to send the markets reeling again. And we'll take another dive. And hopefully that shakeout will shake out all the people that were doing dumb shit. Or at least a good portion of those people that were doing dumb shit. Because how did you not learn from Luna? How did you not learn from that? Did you not see how Do Kwon is still running around trying to evade arrest? Did you not see how that company fell and took a lot of other companies with it? 3 Arrows, BlockFi took a hit, Voyager, Celsius, and a lot of other companies took major financial hits. Now, this deal with Binance and FTX, let's suppose Binance comes back and they say due diligence was fine. The deal could actually still bring in, according to reporting, can still bring in regulator scrutiny. What regulators? Right? Binance has a separate entity called Binance US. FTX has a separate entity called FTX US. So that scrutiny is not going to come from the United States. It could. Doubtful. There are other countries that could, but could be doubtful. Could be hard to actually do something like that. But it is a reality that regulator scrutiny could happen. Okay? Because if they don't listen to, if Binance doesn't listen to governments can say, well, you can't operate here in any way, shape, or form. That could be a thing. And so they would be pressured to do the right thing in that case, right? Is the right thing to walk away from FTX? Like, has the worst already happened? It has already been realized. People using the platform that have money there, have digital assets there, institutional investors that have invested in the firm, with money, like they're already realizing their exposure. How much further can everything fall? As an industry, how much further can it fall is the question. So I told you yesterday how I looked at everything and everything had taken a dip. And I bought in because everything had taken a dip. Now, I told you I have more money sitting on the side because I'm waiting to see if there's going to be another dip. Yeah, I'm probably going to buy in. Probably not today. I think I'm going to wait until after the due diligence happens and then see if I can, buy then. I don't know that we've met the bottom of this particular impact. I mean, everything is down and down significantly. Polygon is below $1. Bitcoin is, has touched, below both of my bands. And I'll show you the numbers in a little bit. But I really wanted to get out here and I really wanted to say, take a step back. Whatever exposure you have, you already have that exposure. Now let's see what you can do to limit that exposure. Have you been limiting your exposure? This is why I say do your own research and get your own keys, meaning I don't trust centralized exchanges, no matter who they are, no matter where they are. I put money into exchange, I do what I'm supposed to do, and then I move either my money or my digital asset off that exchange. So that way I can at least, if let's suppose it takes a dive, that's fine. I still have my digital asset. That's the difference. That really is the difference. Now, I could open up the numbers and I can tell you about how, this company is, doing poorly, this company is doing great, whatever. That kind of doesn't make sense, right? I think what I'll do is I'll just show you the top 25 winners and losers. Actually, you know what? I don't even know that makes sense. Because we know everybody's taking a loss right now. Everybody. I am paying attention to all the stable coins, though. Right? Stable coins are actually stable. But, it sounds funny, but I do pay attention to the stable coins because the stable coins could have taken a hit. But they're maintaining. And that is pretty much a very big deal. USDX not maintaining. They've lost their peg. USDD seems to be off their peg. Who else? Tether seems to be Tether is on their spot. Gemini Dollar is on their spot. Let's see who else is there. USDC seems to be on their spot, so that seems all right. But I am paying attention to that because you want to know if anybody, that would tell you that there's going to be a problem, a further reaching problem. All right, but you know what I do want to show you is right here. So let's scoot on over. This is how ugly the market is. Okay. BTC at 18,000 it had been when I woke up this morning, started doing my research. It was in the 17s. ETH down to 1235, and I'll put something in perspective for you. Matic is at 95 cents. A little while ago it was at 90 cents. 90. I think it was actually below that. Ethereum at $1,235. Yes, all of this is an opportunity. All of it is an opportunity to buy in. I'm waiting. I already bought in some yesterday. I'm waiting to see, when a nice time is to buy in some more. I told you I want to wait to hear about the due diligence that Binance is going to perform. But just keep in mind that when the correlation between Bitcoin and Ethereum, for example, when Bitcoin was at 18,000 a few months ago, not even all that long ago, when that was down there, Ethereum was below $1,000. That was the correlation. The correlation now is Ethereum is still above 1,000. It's above 1,200. Matic, in that same time frame, was all the way down in the 30-cent range. XRP, 38 cents. Cardano, 36 cents. Doge, 8.8 cents, almost 9 cents. You see where I'm going with this? Pay attention. Don't panic. Relax. Yes, it's ugly. Red is not one of my favorite colors. But It is a color that can signal opportunity. And I think there's going to be more opportunity. I mean, but pay attention to what's really going on here. A lot of these coins had established new highs and new lows. Doge was at 6 cents, less than 6 cents, just a couple of weeks ago. And it's saying, yeah, we're taking a hit right now, but look at where it's at. If you were down there at 6 cents where it had bounced around for a really long time, you're still up at 8.8 cents. Matic, what? You've doubled? Tripled? And it's fighting to get back to $1. Again, sometimes tragedy brings opportunity. What was that line that somebody said? You know, when there's blood in the streets, including your own, you still invest. There's a reason why. Because opportunities like this don't come around all the time. And things are so poised to go up that it makes you wonder, like, wow, maybe now is a time to get in. So that's what I weigh against. So anyway, this is Eddie J on crypto. I hope you have a good day. I really do hope that you take a step back, to take a deep breath and really analyze the market as it pertains to your own portfolio. All right? Have a good one. Bye-bye.